Today, we're tackling a topic that many people put off thinking about,
Mm-hmm.
but it's undergoing a massive transformation. Life insurance.
Right, it sounds dry.
Yeah.
But the data we're seeing for 2025 is anything but. Alex, let's start with the big picture. What is the state of the life insurance market right now?
The headline, Ben, is growth. After the pandemic raised everyone's awareness,
Right.
the market has been setting records. For 2024, LIMRA is forecasting total premiums to hit a new high of nearly $16 billion.
Wow.
And that growth is expected to continue right into 2025.
That's a huge number, but I imagine not all life insurance is created equal.
Exactly.
Is this growth happening across the board?
That's the crucial point. It's not a single story.
Okay.
Think of the industry as a multi-engine vehicle.
Right.
Right now, some engines are firing on all cylinders,
Mhm.
while others are sputtering. For example, variable universal life policies, which are tied to the stock market, have seen double-digit growth, up 12 to 16% in 2024.
Wow.
But whole life sales have actually declined, partly because higher interest rates made other savings vehicles just more attractive.
So the economic climate is directly impacting which products sell.
Yes.
That brings me to the people behind these numbers. There's a statistic that I find staggering. The 2024 Insurance Barometer study says 102 million Americans are uninsured or underinsured. That's about 40% of the adult population.
Yeah.
Why is this gap so massive?
This is what I call the great disconnect. The single biggest reason is a profound misconception about cost. The same study found that younger consumers, Gen Z and millennials, overestimate the cost of a term life insurance policy by as much as 10 to 12 times.
12 times? So they're thinking a simple policy that might cost $30 a month is actually going to cost them over $300.
Yep.
No wonder they're hesitant.
Precisely, and this leads to different behaviors. Gen X might hold more traditional views,
Sure.
but Gen Z and millennials are in a tough spot. They have the highest stated need for insurance,
Right.
but they're also the most intimidated. A study from Bankrate noted that 81% of Gen Z turn to social media for financial advice. They're looking for answers on TikTok and Instagram, which is a minefield of good and bad information.
And that's the perfect segue into technology's role. The old process, paperwork, a visit from a nurse for a medical exam, waiting weeks for an answer was a huge barrier.
A huge one.
How is technology dismantling that?
It's a complete demolition of the old model.
Okay.
The key word for 2025 is accelerated underwriting. Instead of a full medical exam, insurers are using AI to analyze vast data sets in seconds. Things like your prescription history, motor vehicle records, all your other digital footprints.
Wow.
Gen Re found this can cut the decision time by an average of 18 business days.
So we're going from a month-long ordeal to potentially getting a decision in minutes.
In minutes.
That's the Amazon Prime effect hitting the insurance world.
Exactly. And this isn't just about speed.
Right.
It's about precision. AI allows for hyper-personalized pricing. Instead of putting you in a broad risk bucket, it can analyze thousands of data points to give you a rate that truly reflects your individual lifestyle. I mean, a McKinsey report highlighted that AI leaders in insurance are seeing a 20 to 40% reduction in customer onboarding costs.
And this is also fueling the rise of online insurance marketplaces, right?
Correct.
Places where you can compare these new tech-driven policies side by side.
Correct. You can now shop for life insurance like you shop for a flight.
That's huge.
This shift is monumental.
All right, Alex, let's pivot to the practical side.
Let's do it.
This is what our listeners can use today. First, let's talk about the economy. How does something like inflation affect a life insurance policy someone bought 5 or 10 years ago?
Inflation is the silent thief of your death benefit. A $500,000 policy bought in 2005 doesn't have the same purchasing power today. Its real value might be closer to $300,000.
Wow.
It's crucial to review your coverage every few years to ensure it's keeping up.
That's a critical point. So let's get into the nitty-gritty of costs.
Okay?
Can you give us a real-world cost breakdown for a healthy 35-year-old looking for a $500,000 policy?
Absolutely. This is where the cost myth gets busted. Term life insurance for a 20-year term, you're looking at roughly $25 to $40 per month.
So cheap.
It's pure protection, like renting a home. Now, Whole life insurance, this is permanent and builds cash value.
Okay.
So it's much more expensive. The same person might pay $450 to $500 per month. It's like buying a home. Then indexed universal life, this is a more complex permanent policy with growth potential tied to a market index. It falls in between maybe $250 to $400 a month, but with more variables.
Right. The difference is stark. Knowing that when someone's shopping around, what's a major red flag they should look out for?
The biggest red flag is an advisor or agent who immediately pushes a complex, expensive, permanent policy without first doing a deep dive into your personal situation.
Okay.
A good advisor's first questions should be about your goals. Are you trying to replace income, pay off a mortgage, fund a child's education, cover final expenses?
Needs first.
Firmly. If they lead with a product instead of your needs, walk away.
That's great advice. And along those lines, what about policy riders, those little add-ons?
Yes.
Are they worth it?
They can be if they fit your needs. For instance, a waiver of premium rider will cover your premiums if you become disabled and can't work. That's incredibly valuable.
Yeah.
An accelerated death benefit rider lets you access a portion of your death benefit while you're still alive if you are diagnosed with a terminal illness. Don't just tick the boxes, understand what you're adding.
Final practical question, Alex. The big choice. Work with a human insurance agent or use one of the new direct-to-consumer online platforms?
My analysis suggests a hybrid approach is best. Go direct online if your needs are simple. You're young, healthy, and you know you just want a straightforward term policy.
Right.
The process will be incredibly fast and efficient. Work with an agent if your situation is complex. You own a business, have a high net worth, need to plan for estate taxes, or have dependents with special needs.
Okay.
A skilled, independent agent can provide a level of strategy that an algorithm just can't.
So the takeaway is that the life insurance landscape in 2025 is more accessible, faster, and more personalized than ever.
Yep.
But the core principles of understanding your own needs haven't changed.
That's the perfect summary. The technology is a tool. But you're still the architect of your financial plan.
Fantastic insights, Alex. This clears up a lot of the fog around a really important topic. Now, here's a question we'd like you to think about. Knowing that the cost is likely far less than you imagined, what is the one financial responsibility in your life, be it a person or a debt, that you would want to protect most?
Thanks for tuning in to the GenSpark AI podcast. We'll be back next week with more data-driven insights.